Welcome to this video on day trading basics. What we're going to cover in this video are important issues for everybody day trading, whether you are day trading stocks, Forex, futures, regardless of the time interval that you're using. I know people get caught up on that. You'll see I'm trading Apple here in a 5-minute chart. But what I'm going to show you today is really agnostic with regard to market or time frame. All right, we'll get to those in a later video. In fact, we'll have a 3-part series on this, so we will get to that. But right now, I just want to share with you 3 important issues for all day traders. So number 1 is you want to make sure that you make note of any daytime economic news that is scheduled. It's very important. So go to a calendar. In fact, I would look at this the night before, and definitely before you start trading any given day, check out Bloomberg, briefing.com, whichever service you want, and look at the scheduled news releases. These are economic news releases, etc., because those are very important. A lot of the sites will actually rank them as to which they feel are the most important. If you're trading stocks, especially you want to look at earnings reports, all those kind of things. Because I don't care what candlesticks patterns you're using or indicators or whatever, there's an old saying in the trading world, and that is this: news trumps technicals. And brother, sister, it is absolutely 100% true. So when news comes out that is surprising or shocking to the market, or heck, it doesn't even have to be pre-scheduled news. It could just be rumor or gossip that comes across the wires as a surprise. You can't really plan for that. Just be aware that in those situations, the market doesn't give a mouse's left patootie about your moving averages, your stochastics, your RSI, your CCI, your MACD, your LMNOP, your QRST, whatever acronym you've got. It doesn't care about all of them, or any of them. All it cares about at that point is the news. And even if it's not real news, you might find out 5 minutes later, the whole market discovers, oh, that was just a rumor. Oh, that was just gossip. But it will have a knee-jerk reaction. So be aware of that, and you'll want to make sure that you are using risk management, because technical analysis does not always work, especially in those situations. However, be prepared. You can't be prepared for the surprise announcements, but you can be prepared for the calendar. What's on the calendar that you need to know. Be aware of that and be watching your time. You might even want to put a little alert or something in your cell phone so that when that time comes, you don't lose track of it. Okay, so that's number 1. Number 2 is key market levels. Very, very important. And here are the major ones that I encourage you to take a look at. So the first one here that we'll look at, since we're trading intraday, the previous day's high is very important. So here we got the previous day's high. Oops, I actually got the wrong tool. That's not the one I wanted. I wanted that one. So it goes all the way across. There we go. All right, so this day, and you can see that here is this little vertical green line. Hopefully you can see that. That marks one day to the next. That's basically why I put a 5-minute chart here, was just so that you could see a whole day on the chart at one time. I wanted you to see that. And then the next day, all right, there's the next vertical line. So the next day, what happens? The market has come up, come down, comes all the way. Where's it go? Well, it went right up to yesterday's high. How about them apples? Quinky dink? Nope. That's what the market does. So everybody and his gerbil is aware of that level, the previous day's high, as well as the previous day's low. Have that marked on your chart as well. I would just make them, I'd put lines, well, I do. I put lines on there so that I'm aware of them, I see them, and again, your trading platform might be a little different, but just put a horizontal line in there like that. Come in here, I kind of like to draw them off of the real bodies more than the wicks. And so this day it didn't come down there, but again, it may someday. And these are levels that are very, very important. So previous day high, previous day low, also the previous day close. Now let me show you a different example of that. So with regard to the previous day's close, there's a couple of things that can happen. It's always important. So here's the close of this day. And as we start trading this new day over here, we want to know where that line is. So again, I always put that line on my chart before the day opens. So a couple of things. First of all, that is going to be a neutral zone. The close of the previous day shows where the market ended up and valued that market, whatever you're trading, through all the ups, all the downs, after all was done in the morning, the afternoon, and into the evening, whatever, the market decided on a final value for that day of that particular market, and that's it. The close is the most important price point of any given day. Now, the next day, therefore, if that's considered okay, now are we going to be above that? Then we're in bear or bullish territory. If we're below it, we're bearish with just relative to the previous day. Remember, day trading, you're in and out within one market open outcry period of time. So it's very short term. And so we're not talking about long-term valuations here. We're just talking about with relation to the previous day. Are we above where the market ended up valuing itself, or are we below it? So that is your line in the sand between a bull and bear market with respect to yesterday. Now, notice that we have the market come back up to that level this day because we gapped down. There was a gap down. And after the market came back down, it came right back up and tested it. So you got your little gap close, and then we went down. So it can be important for that reason as well. It can provide support resistance as well as a line in the sand between a bull and bear market. So really two purposes, or purpose I, or purposes, whatever the right word is that. Good thing you don't have to know English very well to be a good trader. The other thing that I want to be very clear about, this is very important, is not to have unrealistic expectations for any of these support resistance levels. In other words, you can't expect that the market's going to come right to the pixel on your chart, on your screen, of the previous day's close. No, it's going to, it comes back up and look, goes above it a little bit, right? You cannot be that myopic or that precise with the markets. That is still providing resistance. And because the markets are, traded by lots of people all over the world, all different time frames, all different indicators, and therefore there's a little bit of messiness within these zones that we like to call support resistance. Now, a third element of support resistance that you should have on your charts at all time is longer-term major highs and major lows, as opposed to just looking to the previous day, because these will carry on for multiple days if they are not hit. In other words, people will be watching them. So here this day, let me get that whole day on the screen. There you go. So, all right, that's the low of the day. It's actually down there technically, but again, I like to use the real bodies. Again, that just helps to accommodate for a little bit of that messiness of the market. The next day, does it hit that low? No. We go a whole day and we do not retest that low. So should I take it off my chart? No way. Nope, because the market's going to remember that. And again, people trading longer term charts, who are maybe doing some swing trading or trading 30-minute charts, 60-minute charts, so they're going to see that as a major support level, and they will respond to it. They will buy into it, take profits into it, whatever. So therefore, that's going to be seen by people. Because it's seen by people, therefore it's going to have significance. And there you go. So boom, the day after that, now for this day, it lasted 2 days. Came back down, bounced back up. And in this case, it actually did go back down below that, but it provided a support and the market bounced off of there. Because why? Market participants looked at that, created uncertainty at that time as to, I don't know if we're going to go through that. And so they paused. People who were short maybe took some profits. People who were more bullish on the market, that's a place they saw would be a good buying place. Only one side is going to be right. But again, it at least creates a short-term, if not long-term, bounce in the market. And therefore, you should have always have these on. Now, the question always comes is, how far back should I go, Barry, with those longer-term support resistance levels? And there's no real black and white answer to that. Just go back, as far as you can, I would say. Definitely 5 trading days. That's not 5 weekdays. That's 5 trading days. Just go back as far as you can. Okay, as far as you can. Because you got to remember, that's going to come into play for people trading longer term charts. They will see those. Now, once these levels are broken a couple times, then you don't need them anymore. So you only leave them up until they have been broken. But until they're broken, I'd leave them up there. And then the final point that we can actually show on the same slide is the volume saucer, what I call the volume saucer. This is very important. And what that means is that the market volume pattern has a meta pattern like this. So it's kind of a saucer type pattern. So early in the day, and you can even see here at the end of that day, right, it went up. And so you have a lot of trading in the morning. You've got not as much in the afternoon. Or I'm sorry, well, yeah, not as much in the midday, we'll say, around noontime. And then volume picks up again at the end. So it creates this volume saucer. That is a meta pattern. So where that becomes important is that a lot of the time when you're reading technical analysis books, they don't take that into effect. When they're teaching you candlesticks or multi-bar price patterns or indicator patterns or price and volume patterns together, that stuff's really meant to be read with daily charts without accommodating the fact that volume comes out of the market during the lunchtime, generally. Not always, but generally. And so therefore, your indicators are going to be affected by this. Your candlesticks are going to be affected by it. Your big price patterns will be affected by it. And volume. Can't look for price volume coordination as well for that reason either. It's going to be exaggerated in the morning and late day, and it's going to be underplayed in the middle of the day. So quite frankly, reading volume patterns on intraday charts, it can be done. It can be helpful. But if you're using the traditional techniques that you've learned, which are typically taught for daily charts, then no, it does not coincide perfectly. And be very aware of that. So if you start thinking, oh, these price volume patterns aren't working, and you're a day trader, that may very well be why. So that's it for now. We'll have a part 2 and a part 3, but I am giving away one of my favorite trade strategies, a very specific trade called the rubber band trade. Be happy to share that with you. Just click the green icon up there in the top right-hand corner, and we'll get that over to you for free with a little mini course on exactly how to trade it, the entries, the exits, everything, absolutely free, my gift to you. If you like these videos, you want me to create more, please leave comments below. That's what encourages me to keep providing these free videos for you here. And also give it a thumbs up and share it with others. Share good things with good people. That's really the best thing you can do. If you want to encourage me to continue creating more free tutorials, which I'm happy to do. I really enjoy doing this. But just like to know that people are consuming them and enjoying them. And if you are, share it with other people, and it'd be much appreciated.